My name's Angela Dunn. I'm the managing director of Rehab Wallet, and I have been since inception a little over 3.5 years ago. I've got 3 decades of executive leadership, with the majority of that being in the retail industry and also in manufacturing. And then more recently, over the past 4 years, or almost 4 years rather, leading Rehab Wallet and also some private lending. We are at Rehab Wallet, we are the lending arm of passiveinvesting.com. And our partners at passiveinvesting.com, they raise the capital for Rehab Wallet, and our team lends the money out. But at Rehab Wallet, just to share a little bit more about our company, in case you're not familiar with it, we're one of the East Coast premier private lenders to real estate investors. We provide small balance loans to flippers. We're headquartered in South Carolina, and that's also where the majority of our loans are. Almost 70% of the loans that we funded since inception are here in the state of South Carolina, with the majority of that being in the Charleston, South Carolina market. And we think of ourselves as the flippers lender. Want to share with you just a picture of our founding partners and our managing partners. You guys are probably familiar with all three of them, but Danny Randazzo, Dan Handford, and Kelly Garrett. And Kelly Garrett, of course, her background is not only as an owner of a mortgage business many years ago, but she also flipped houses for over 18 years. And it's her experience and her connections and her network, particularly here in Charleston, South Carolina, in the Low Country, that built the foundation for this amazing company and our ability to have such strong relationships here in the Charleston market. But you can see that picture there of our managing partners, who are an integral part of our team. The other part of our team, also incredibly important to our success. You can see all of our teammates up here, but I'm on the top left, Angela Dunn, and Harris Jones, our operations director, Anna Teixeira, our sales director, Kelly Robinson, our operations manager, Amanda Myers, our compliance director, Stacy Foster, our finance coordinator, Melissa Broom, our marketing director. And not only does she assist us at Rehab Wallet, but she's the marketing director over all of passiveinvesting.com's businesses. Our newest teammate, Susie Balda, she's a loan originator and joined our sales team recently, just a month or so ago. Cassidy Mattingly, she is our very experienced loan processor, and Jennifer Julian, who wears a couple different hats and is our admin associate. So we would not have accomplished all the things that we have over the past 3.5 years without all of these people that I've introduced you to. So thanks and props to all of them. Speaking of what Rehab Wallet has accomplished since inception, we have closed and funded over 1,260 loans, and that funding or dollar amount is over $255 million now. So very exciting, and we appreciate all our support. So let's dive into, well, what is a debt fund? A debt fund pays fixed income to investors. Another, I guess, characteristic is that it also, at least our debt fund rather, pays distributions monthly. We have a compounding feature and a liquidity option. Our liquidity option here at Rehab Wallet is 90 days. So it provides not only that option to, a less amount of time from a commitment perspective, but again, pays fixed income to investors. Ours does on a monthly basis. Others may on a quarterly basis. We offer that compounding feature and the liquidity option. So one of the reasons we wanted to share and provide this content for our webinar today was to share with you not only some of the benefits of specifically our debt fund, but also how to, when you're making that decision to invest, um, either operate or invest, should your fund be open or closed, and what really the two of the main differences there are. An open fund involves less risk for our investors, and of course, the reason, if in case it's not, immediately obvious, but we at Rehab Wallet, we collateralize all of our investors' funds into all of our loans at Rehab Wallet, all of our loans in our portfolio. So what that means is the not only is the risk spread out, but the performance of one individual loan does not impact the value that the investor receives. Additionally, closed funds, to explain those in a little bit more detail, is they're typically, or historically, they are more risky. And that's because an investor's funds are collateralized by a single deed or mortgage, and there's a line drawn to one particular borrower. So in the case of an open fund, again, not only are there multiple experience levels from different borrowers and investors, or flippers rather, they're also spread out among various assets. And as we work through the slides, you guys, I know you'll have, or you should rather have an opportunity then to take, we'll be accepting your questions. We'll want to answer those for you and share, again, as much value during this presentation as possible. All right, so what types of investors like these funds? Historically, it's been our experience that more conservative investors tend to prefer debt funds. These conservative investors are not willing, or it's just not a good fit for them to place their money in another type of asset class that has a higher risk tolerance or may require a higher risk tolerance. So the types of investors that like debt funds typically are more conservative. Another benefit is this type of investor typically either wants or needs, they prefer distributions monthly. So it creates cash flow for them, and that's a great benefit to our debt fund and this type of fund. Investors also that want more diversity or diversify their assets, they are able to receive more stable returns, and again, just that reduction of risk. All right, so how is the debt fund collateralized? And we've touched on this briefly, but at Rehab Wallet, we collateralize um, over all the loans in our portfolio. So currently we have well over 350 loans. Obviously, each day, each business day, we have new loans that we fund. We have loans that pay off and borrowers that exit from their projects. But at any given time, our debt fund collateralizes investors' money throughout the entire portfolio. Loan docs are signed with a title company or an attorney, depending upon what state the borrower and is flipping the property. So that involves a deed, mortgage, and promissory note. Additionally, one of the reasons that risk is reduced when a debt fund collateralizes over the entire portfolio, we also have personal guarantees. So we loan in an LLC, but those members of the LLC also are personal guarantees on these loans. So in the event the borrower was to not perform, which is a very, very rare occasion, but we have personal guarantees. So that is how Rehab Wallet and our debt fund collateralizes. So that's a high level overview. And at this time, if you've got any questions that we haven't touched base on, one of the things as we wait for some questions is want to share just a few more stats with you, because as we approach year end, I know there's a lot of investors and borrowers that are setting goals, creating plans for 2024, and working their way to the finish line to achieve their goals for 2023 that they set earlier in the year, maybe at the end of 2022. And I shared with you earlier, Rehab Wallet has, since inception, funded over 1,200, almost 60 loans now. And that is well over $250 million. But we are setting goals and looking into next year. And we hope that our content that we've shared today, if investing in a debt fund is something that you've considered, we hope that the information we're sharing will provide some insight into the benefits specifically of our debt fund, Rehab Wallet, and that little bit of overview that I gave of our team. But we are looking, because of the demand that currently exists and has existed really since we opened up June of 2020. The demand continues to exceed our expectations, and we're looking forward to a great year of growth. So at this time, I think we'll open it up for questions, and give me just a moment here as I kind of toggle between some screens. But looks like we do have at least one question. Rusty, thank you so much. Looks like you're interested in what our LTV is and what do we lend up to the purchase price. So at Rehab Wallet, we will loan up to a 70% LTV, and we will loan up to 90% of the purchase price. We do have some very, very experienced, really our highest level of experienced borrowers who have successfully paid off multiple loans. We will loan possibly as high as 95% of the purchase price. But that LTV, we do set a limit at 70%. So that's a great question, and appreciate that, Rusty. Let's see. All right, if we've got any other questions, I'll be more than happy to try to answer them. And I realize also that sometimes many of our folks in the multifamily investor nation watch the recorded version of it. I don't think I shared my email address yet and how you can contact me if for some reason we're not able to answer your question live. But I can be reached at Angela at rehabwallet.com. And you can email me directly with questions, but we've got a handful of more in the queue here. So, uh, our, I think the question from Emma is what asset classes? We are a lender on single family homes. So, on a rare occasion, we have done some much smaller 4, 6, 8, 10 door multifamily, but probably 99% of our portfolio, Emma, is in single family homes. Our avatar or customer is flipping a home that's right around 1,500 square feet, 3 bedrooms, 1.5 baths, just great starter homes. And often our borrowers are looking for the ugliest house on the street, or certainly the house that maybe just needs some loving, you could say. But single family homes, yes. So, Rusty, thank you for got another question. So, default trends. We at Rehab Wallet are not only fortunate, but we've kind of made our own luck. We've been very diligent in who we lend to, and that has managed our defaults at an incredibly low level. In the past 3.5 years, we have had one default, one foreclosure, and even that one we exited profitably. When we took ownership of that property, we didn't even have to list it. We had some borrowers who had expressed interest and knew of the property. But we have had one foreclosure in 3.5 years. Now that, past performance is not an indication of what is expected in the future, but the business model and the proactive uh, checklists and actions that we're taking and that our compliance director is the owner of, while we do anticipate additional foreclosures or defaults in the future, um, we we do a very good job at helping our borrowers prevent that. All right, so looks like I had a question regarding if we will loan on mobile homes. And while again, single family homes is our primary asset that we lend on, there have been some mobile homes, newer ones, that have to be detitled. But you could reach out to our sales team if you've got a specific one. Anybody in our audience, Anna at rehabwallet.com, or just our general mailbox. And of course, if you want to visit our website, that's rehabwallet.com. All right, thank you for those questions. Robert, looks like his question is in reference to our interest rates, our returns from the debt fund. That's a great question. So our investors earn 6% if their investment is under $100,000, and those investments that come in that are over $100,000 earn 8% interest. And that 8% option was added in April of this past year of 2023. So 6% is earned on investments under 100,000 and 8% on 100,000 and above. Another great question. Thank you. The minimum amount to invest in our fund is $25,000. So thank you for that question. Again, you can come into our fund for a minimum investment of $25,000. Is there a tax benefit for the return? While I won't, we don't have depreciation, is my understanding. I'll probably get some additional follow up on that from our capital raise team. But Robert, if you want to email me that question at angela@rehabwallet.com, I'll put you in touch with someone on our capital raise and our investor relations team to answer that a little bit more thoroughly for you. Thank you for the question, though. Vincent, the term of the loan, great question. Thank you, guys. This is awesome. We offer 6-month and 9-month terms, and those terms do have an extension available, but our average loan right now is 181 days for the past rolling 12 months. So the majority of our borrowers exit right at that 6-month mark. One thing we have noticed over the past, I'd say quarter, maybe 2 to 3 months, is an increase in our borrowers preferring the 9-month option. We actually launched that 9-month option in 2023. So hopefully that answers your question, Vincent. We offer a 6-month and a 9-month. Is the fund leveraged with lines of credit? You know what, Rusty? I'm going to ask you to. I'll have to get with our team to get that, our capital raise team, to get that question answered for you. But thank you. And we have a new partner. So I've got an additional question. Can this be a conventional loan? We are a short-term asset-based lender. So our interest rates that we charge our borrowers is not something you would want to carry for a longer time frame. But we have a new sister or brother company, if you will, under our passiveinvesting.com brand. And they are called Consistent Capital. And many of our borrowers are now successfully refinancing with Consistent Capital. They will work with our borrowers. They have, a lot of experience. Whit McCarthy is the founding and managing partner there, along with Kelly Garrett, Dan and Danny. And they've got some amazing products. They're continuously adding additional products that they can offer our borrowers. And it's not just exclusive to Rehab Wallet borrowers, but we certainly, early on, when our borrowers identify that they want to buy and hold once they've made the repairs to their asset, to their project, we'll get them started early on before their maturity date's even approaching, to get them connected with the sales team at Consistent Capital and to start that process, so it makes the exit strategy even more seamless. So that's a great question. William, my email address again is angela@rehabwallet.com, and that's just spelled pretty much the traditional way, ANGELA@rehabwallet.com. So thank you so much. And looks like we've got time not only for one more question, but Rusty, again, I appreciate your participation today. So typical origination fees, interest rates, Our interest rates currently are 13.75 for a 6-month term and 14.25 for a 9-month term. Our origination fees are typically 2%. And depending upon whether you need us to fund your rehab, the lender fee will vary between $1,000 and $2,000. The reason for the higher amount on the processing, or the lender fee rather, is what we refer to it in our term sheet, is if we're managing your draws, obviously it's a little bit more time involved and time intense, but we do offer loans where we will fund your rehab. If your scope of work and your rehab budget is small in comparison maybe to your purchase price, or dependent upon our borrower's business model, if they just don't need the loan from us to include their rehab budget, we're set up to create terms that are a win-win for our borrower, our flippers. And I think it's a great time for us to share, and I'm going to brag again on our team, but we currently have an 85.5% return borrower rate. So what we have found is the seamless effort, and certainly partnering now with Consistent Capital is going to make it even more seamless for those borrowers who are wanting to buy and hold. But our borrowers, once they successfully close their loan with us, they often return. So to the tune of almost 86%. And that return borrower rate has been consistent for almost 24 months in a row. We're really, really proud of that. Would not be possible without the amazing investors and borrowers within our network. So you're so welcome, William. Appreciate all the great questions. I think that just about handles all of the open questions. Again, if for some reason you didn't get to submit one, maybe you weren't joining us for the live webinar and you're watching it later, because we do record these and share them, please feel free to reach out to me at angela@rehabwallet.com. And I think the only other thing that we would like to share, let me see, I've got a couple little chat questions, so hold on one moment. We'll try to get to those as well. Let's see. All right, so we had someone who just joined us a few minutes late asking, do we lend anywhere in the US? We don't lend in all. We're primarily focused in the Southeast. So great question. We do get lots of requests in markets outside of where we're currently lending, but we have been very busy, as I'd shared earlier, not only in the state of South Carolina, but North Carolina. We've got a large percent of borrowers, investors in the state of Georgia, Tennessee, Virginia. It's really primarily in the Southeast, but we also have some great connections, and we are expanding in 2024. So if we've got some borrowers in the audience that are interested, that currently isn't, maybe you're doing business outside of the Southeast, please feel free to reach out to us. Just because we're not lending today in your market doesn't mean that in the future we won't. And our lending model is truly asset based for very experienced flippers and investors. So I hope you'll give us the opportunity to at least consider your deal. And so great questions. All right. Again, our website is www.rehabwallet.com. and you can get lots of additional information, learn a little bit more, not only about our managing partners, but also our team at Rehab Wallet. All right. If there are any other questions, we will give this just one more moment before we sign off for the day. But I want to thank everybody who joined us live today. Looks like we had a nice little crowd. I appreciate you making time to be a part of this event, and I appreciate the opportunity to participate in it. All right, you guys. Thank you again. Y'all have a great day.